Today, the crypto story gets even worse. Hello again, it's Martin North from Digital Finance Analytics for the latest post covering finance and problem news with a distinctively Australian flavour. Over in crypto, the fallout from FTX's collapse shows few signs of easing as the crypto industry reckons with direct exposures, plunging token prices, and newfound skepticism of even long-established participants. The fallout from the rapid collapse of Sam Bankman-Fried's FTX is spreading across the crypto world, ensnaring the billionaire Winklevoss twins through a liquidity squeeze at their lending partner Genesis. Less than a week after Sam Bankman-Fried's empire filed for Chapter 11 bankruptcy, digital asset brokerage Genesis said it will halt lending redemptions after revealing last week that its derivatives business had $175 million locked in an FTX trading account. Crypto exchange Gemini announced custom withdrawals are being delayed from its yield-generating product, given Genesis' role as a key partner in the program. And that's only one slice of the tangle of interconnections in an industry where FTX was a ubiquitous presence. Genesis is suspending redemptions and new loan originations at its lending businesses after the unit faced withdrawal requests that exceeded current liquidity. Gemini Trust, founded by Cameron and Tyler Winklevoss, subsequently announced that its yield product for retail investors will also halt redemptions, as Genesis was a key partner in the program. The crypto world, initially built on the tenet of decentralization, but which ballooned into a fully fledged financial ecosystem complete with digital asset lending, is facing a reckoning in the wake of FTX's bankruptcy. Regulators are probing whether Bankman-Fried and his associates misused customer funds. At stake is whether a crisis of confidence topples the lucrative business of borrowing, lending, and leveraging crypto and causes an industry-wide retrenchment. Genesis, a counterparty to many in the sector, have been closely watched as a gauge of the industry's strength or for signs of contagion. Gemini, whose Earn program offers customers the opportunity to put their crypto to work in return for yields exceeding 8%, is one of Genesis' bigger lenders, and it's originated about $4 billion in crypto loans as of a year ago. We are working with the Genesis team to help customers redeem their funds from the Earn program as quickly as possible, Gemini said on its website. We will provide more information in the coming days. This does not impact any other Gemini products and services, the firm added. All customer funds held on the Gemini exchange are held one for one and available for withdrawal at any time. Crypto lender BlockFi and Voyager Digital are also under pressure. BlockFi, which on Monday said it had significant exposure to FTX and its related entities, is preparing a potential bankruptcy filing. The Wall Street Journal reported Voyager, which Bankman-Fried was going to rescue in a $1.4 billion deal, is now twisting in the wind, trying to find a replacement buyer for its assets. Investors such as crypto hedge fund Gallius Capital, which reported significant funds stuck on FTX's platform, are also feeling the impact. Even miners are getting hit, as the decline in crypto prices sparked by the collapse of FTX has also put further pressure on profits. But it's crypto lenders that are feeling the most acute strain after a year of persistent downward pressure on digital asset prices and multiple high-profile blowouts, including the algorithmic stablecoin Terra USD and hedge fund Three Arrows Capital. Celsius Network itself, a crypto lender, was among the major casualties of those collapses earlier this year. It sought bankruptcy protection. Genesis said last week that it would get a $140 million equity infusion from its parent company, Barry Silbert's Digital Currency Group, after disclosing that its derivatives business has $175 million locked in an FTX trading account. While Genesis is one of the oldest and most well-known crypto brokers over the past few years, it built one of the biggest digital asset lenders as well, allowing funds or other market makers to borrow dollars or virtual currencies to leverage their trades. The lending business already faced trouble when Three Arrows collapsed, and it had made a $2.4 billion loan to the now bankrupt hedge fund, which was run by Suzu and Carl Davis. The requests to withdraw funds exceeded available liquidity at Genesis Global Capital, its lending arm, according to Interim Chief Executive Officer Dira Islam. The New York-based company has hired advisors to explore all possible options, including raising new funding, and will deliver a plan for its lending business next week. While Genesis spot and derivatives trading and custody businesses remain fully operational, the company said. The lending business has shrunk dramatically, with loan originations falling to $8.4 billion in the third quarter from $44.3 billion in the first 3 months of the year. Genesis has been downsizing ahead of its latest squeeze. The company eliminated 20% of the then 260-person workforce in August and appointed him as interim CEO, replacing Michael Morrow. Announced departures include Noelle Acheson, who left her post as head of market insights, Matthew Balansweg, who stepped down as co-head of sales and trading and said he would move into an advisory position, and Michael Patchen, who left after 3 months as chief risk officer. Digital Currency Group also controls Grayscale Investments, which offers the Grayscale Bitcoin Trust, or GBTC, the largest investment vehicle in the crypto market. The trust is trading at around a 40% discount to the market price of Bitcoin, and crypto prices, which have taken a leg lower since FTX's troubles started earlier in the month, extended losses on Wednesday, with Bitcoin falling as much as 2.9%. The world's largest cryptocurrency has tumbled around 75% from a record high, almost $69,000 reached about a year ago. And so you can see here the fallout. And anybody who thinks that the crypto sector is decentralized and uncontaminated by these risks are kidding themselves. You can see how now this digital network is beyond comprehension, and the risks in the system are unknown. This is a parallel to the global financial crisis of 2008 and 9, but the problem now is, of course, that this is totally unregulated. Many people are going to lose their shirts and lose confidence in crypto more broadly. On the other hand, of course, there will be those who will continue to say that Bitcoin remains stellar in the mix. Well, we'll see. And if you want to know more about that, watch my recent live show with Adam Stokes, where he defends the role of Bitcoin and its potential future. I must say I'm a little less convinced. To my mind, this was always going to happen. And you may remember in my earlier commentary, I did highlight the risks and derivatives that were being stacked into the crypto sector, and the fact that they were following very largely the same playbook as the broader financial system, without the guide rails and the regulatory controls. Unfortunately, a lot of investors are going to lose a lot of money in the process. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.